Going live with Stephen Hall. Stephen is part of Robert Hall and Associates. They're out of California, but Stephen gets to live in the great state of Florida, which is pretty cool. I'd love to hear that story a little bit. But Stephen is going to be one of our guests at our Florida boot camp, October 16th and 17th. If you don't have your tickets already, go ahead and go to investorsummitbootcamp.com, investorsummitbootcamp.com. But today what I want to do is I want to talk to Stephen a little bit about kind of, it's the unsexy part of real estate. I think it's the part that people don't think about until maybe, well, some people think about it April 1st or April 14th, but I've learned my lesson that having the right entity structure isn't just filling out your taxes. It's about actually planning it, strategizing it, and having them as part of your team. So Stephen, just tell me a little bit about you and kind of what you do and how you help investors.
Thank you, Stephen, for having me on your show. First of all, my name is Stephen Hall. I am one of the owners of shareholders of Robert Hall and Associates. We're an accounting firm that specializes in the real estate industry, including real estate investors, landlords, lenders, and you name it, anything that deals with real estate. And I personally am a landlord myself. So as a result, I really understand what all of you deal with every day as a landlord and action items you need to take to maximize your wealth. And Stephen and I were talking earlier about it. It's all about, it's not about what you make, it's what you keep. And it's important to plan ahead. And like Stephen said, you don't want to wait till April 1st or April 14th to decide what to do for the previous year. You want to plan now to plan for 2021. You want to plan next April. You got to plan right now. And when we were talking about entities, a great entity at a very high level is a limited liability company. It's in short, it's called an LLC. LLCs are great for a couple of different reasons. One, it minimizes your exposure from a liability perspective. Attorneys can explain that in detail all day long, but it's important to have your books and records in order. The IRS wants to make sure that you use that LLC checking account to pay all your expenses and you book all of your revenue from your tenants in that checking account, as an example.
Now,
so that's an example.
Let me ask you this real quick. A lot of people think an LLC is the end all be all to protect them. And maybe you can help educate me and make sure I'm explaining the right way to people. I explain to them that the LLC is a great anonymity protector to a certain degree. Meaning if you do something illegal or you do something wrong, it's very easy to pierce that corporate veil. It's more of a way to not commingle your funds, to understand that you are a real business and you're running it as a real business. It's not a way to mask that you're really not acting like a business and that you're just going to kind of throw things in there. Like a lot of people say, like, oh, I'll just put it under the LLC and I'll just run everything through that. I'm like, well, it still has to be justified. Like you can't just throw everything in there and think you're protected and you're never going to get sued and you're in this fantasy bubble that can never be touched. I mean, is that correct, first of all? And how do you explain that to people?
Yeah, great question, Stephen. And you're absolutely right. You don't want to use an LLC as an umbrella for everything. Your LLCs are to define a specific business arrangement. So for example, if you buy a duplex, you can put that the duplex in the LLC and just run your duplex related activity through that LLC. You don't want to run your kids' childcare through the LLC. You do not want to run your grocery bills through the LLC. You want to keep that very separate. And just because you have an LLC doesn't mean that you won't get sued. You can get sued for anything. So that's another reason why I always recommend clients, on top of having an LLC, is to have an umbrella insurance policy for the LLC. So that way, if anything does happen, you have an insurance vehicle that can help represent you for a lawsuit or a court case. And number three, go ahead, Steve.
Go ahead. I got a question, but I want you to finish.
Okay, great. So on number three, if you have a 2-member LLC, you can file this LLC tax return as a partnership. And the beauty of being a partnership is you're statistically, the chance of an audit go down from 1 out of 45 tax returns under your Social Security number to 1 out of 300 under a partnership. So it dramatically reduces your chance of audit risk when you file an LLC tax as a partnership versus an LLC under your Social Security number.
Now, what I was going to ask you is, and I don't know if this is still the case or if this is maybe just a Texas thing, but for a while, they were coming out with these sub-series LLCs, and there were some people saying that you could put multiple properties in an LLC, which I did at one time when they first kind of came out, and then people were saying, no, don't do that, just put one in. But my understanding is if you just put one in, you're paying a franchise tax for each one, depending on the state you're in, obviously. And you're paying accounting to get each one done. So does it make financial sense if you were a single member, not a joke, but if you're a single member, does it make sense to put multiples in the LLC, or do you put single one into each one?
That's a great question, Steven. So what you're referring to is called a series LLC, where you have one. So what a series LLC is, you have one mothership. Think of a submarine. You have one beautiful shell, and then you have fire doors throughout the submarine. And I'm sure we've all seen movies where when there's a flood, you just simply roll up the door and it seals that door shut. So whatever flood there is in that little compartment, you're protected. That's a series LLC. And Stephen, just like what you said with the submarine or the series LLC, you're going to have your own separate set of books. You got to track for each compartment. And you also have a franchise fee for each compartment. And some states are very reasonable in fees, and some states like California are $800 a year just to operate for each compartment. So when you ask a question about is a series LLC better than having multiple independent LLC, it just depends on the state you're operating in and the costs, number one. And number two is what your lawyer would recommend. Some attorneys would recommend the series LLC out of Nevada if you own real estate in Nevada. And then attorneys in California would rather recommend you to have an individual LLC for each parcel that you acquire and have in your portfolio. And some folks will say it depends on how much equity you have in the property. For example, if you have over 100,000 or 200,000 in equity, you may want a separate LLC for an additional property in your portfolio. It's just everybody has their own variety, so there's no one simple fits all answer, unfortunately.
It's funny you say that, because when I was learning about LLCs and structure entity protection, I remember a guy that taught me a long time ago. He was explaining that actually your best battle against a lawsuit is actually a mortgage on your property. Because if they look at your property and they go, well, the property's worth $400,000 and he owes $395, we can put a lien on it, but we're in second, third position, which is going to fall off over time. I'm not saying that's the way that you should protect yourself, but it was like, the mortgage itself is actually the best source. Now, obviously, if you did something illegal, that's another thing, or you did something wrong, but having a mortgage on your property is actually one of the best sources of protection as soon as they looked at it, because they're going to go, well, there's no equity here. Now, if you have $400,000 and you only owe $50,000 and they go, well, there's $350,000 here, we could sue them, let's see what we can do. We could throw a lien on this property and see what we get. So I always remember, I just remember that in the conversation when I was learning about entity protection. And I always thought that was interesting, that you never think about a mortgage company actually being an asset protection tool.
You're absolutely right, Stephen. But the other factor is, forget the lawsuit. Let's say you win a lawsuit. You still have to spend money to win the lawsuit.
Yeah.
And that could cost you $50,000 to $100,000 in a lawsuit. So that's where insurance comes in, and people sometimes forget that they think insurance is an expense, but when you plan properly, insurance is actually your friend. So that way, if you do all the right things and you're advised by your insurance agent and your attorney on how to structure your bank accounts and your records and how to manage the risk of your portfolio, the insurance company will then kick in to cover those legal bills for you to win that case, as an example. That's the most important point to make.
Agreed. 100% agree. So what are you seeing as the current challenge, the biggest challenge right now in the real estate / entrepreneur world when it comes to protecting yourself, taxes, everything that's going on? What are you seeing in your field?
The biggest challenge is planning. It's that simple. The biggest challenge is entrepreneurs and folks in real estate are having trouble trying to forecast where this economy is going. Is it going to continue to go like this? Is it going to go like this, or is it going to go like this? And it's hard to forecast because, as we all know, when you buy a piece of real estate, You're going into an asset that it's not liquid. It's not like a stock. You can just push a button online and cash out and have your money go to cash. It's like once you buy that property, you're running a marathon. You're not running a sprint. It could be a 27-month marathon, or it could be a 60-month marathon, depending upon the region of the country you're in and the kind of property you buy. So the biggest challenge is really making sure you have enough cash on hand to weather a crisis like we just experienced with COVID. You got to make sure you have enough cash on hand so that way when something does come up, you're prepared for it. And unfortunately, with COVID hit, a lot of folks never factored in what I call a black swan or a third-party surprise that just hit us out of nowhere when the economy was just humming. And for some folks, it was a great way to make money, with short-term rental or to deal with, for example, the apartment market. It went through the roof where there's very low vacancy. But if you were in the office market as a landlord in California, they got absolutely hammered because most of the corporate tenants were leaving because they decided that working from home was going to be a better environment than folks being in an office. Those are areas you can't forecast or predict, but what you can predict is how much cash you need on hand. Because those folks that had a large industrial or office portfolio that kept at least 18 months of reserves on hand weathered the storm. And then what did they do with those excess reserves? They took advantage of the crisis and they bought additional units in their portfolio around May of 2020. And as a result of that, I had a call with one client 2 days ago. They were able to double their money and exit that property as a result of that maneuver that they did around May of 2020.
It's funny you say that. I know you're going to talk about this. For those of you who just joined us, Stephen Hall is a tax expert, and he's going to be talking about all of this at our investor boot camp in Fort Lauderdale, October 16th and 17th. If you guys don't have tickets, go ahead and go to investorsummitbootcamp.com. It's going to be me, ton of other people, Ashley Kerr, Bobby Sharma. We got a whole list, Robert Seifert, again, Stephen Hall. But I guess one of the things I think is interesting, Stephen, is, in life in general, we all know that there's seasons, right? We know there's summer, we know there's fall, we know there's winter, we know there's spring. And we're not normally shocked when winter hits, right? We kind of know when winter comes. But what's interesting is when it comes to real estate, everybody thinks it's summer forever. And then when winter comes, we seem so shocked, like we can't believe that actually we're in a winter month. Everything has a cycle. And I think a lot of people don't realize that winter is coming. We don't know when, and we don't know how long, and we don't know how intense it'll be. But winter is definitely going to come. And when it comes, it's going to, it's going to take care of a lot of people that don't have their entities right. They don't have their structures right. I'm a big believer, and I learned after I sold my business just how important entity structures and planning and strategy is. I think a lot of people, they think, well, I'll wait until I have that. I wait until I have my money. I'll wait until I'm in that position. And I think a lot of times, and you correct me if I'm wrong, well, not a lot of times, sometimes I would imagine that's too late. And if I didn't have my guy set up and he knew what I was doing, and I didn't execute when he said, it would have been a very, very costly transaction for me from selling my business, because I was set up correctly. He told me what to do. As soon as we sold the business, I executed some opportunity zones, some other things. But if I didn't do that, it would have been hurting me. So what advice would you give to people about thinking like, I'll wait until to call someone like Stephen?
Yeah. So first of all, Stephen, that's great. Thank you for sharing your success story on the business you sold. So for all of you that are listening, an opportunity zone, it's a special zone that the IRS allows people to invest in and pay very little tax. And as Stephen's been educated, you have to keep the investment for 10 years for you to see this kind of a capital gain exposure. So it's not a sprint where you can just put money away and it just sits there for a year and away you go. It's a 10-year commitment. That's a long time. So Stephen had to do a lot of research and a lot of due diligence to find the right areas that he could invest that money in the opportunity zone to make sure that 10 years from now, whether it's a summer or a winter economy, it will withstand those seasons. It'll withstand the test of time. So that way he can recoup his investment and make a profit. And that's a very important distinction to discuss. Go ahead, Stephen.
Yeah. What advice would you give to people and I know you're going to be talking about this at the boot camp, but what advice would you give to people to start planning correctly now? Like people think I always hear this, like, oh, I'll get the tax guy when I have the money. And I'm like, you're doing it wrong, man. I'm like, you're missing the point. It's not how much you make, it's how much you keep. Like, you don't get it. So what advice would you give to people to kind of get it through their heads that they need to do this stuff now?
Yeah, the advice I would give anybody is, first of all, get a team, get a dream team around you, and get mentors like Stephen around you that have been there, done that, and they'll be the first to tell you, you got to talk to a tax expert like myself, but not just a tax expert that they handle taxes. You want a tax expert that eats, sleeps, and breathes real estate. Yeah. That's key, because that person will understand the nuances of loans. They'll understand the nuances of underwriting conditions for your loans and what documents that lender will need for you to qualify for the next deal you acquire. Those are very important points you have to plan ahead on. And also, when you're mapping out your tax strategy, you're not necessarily mapping out just to save money on taxes. You're also mapping out how to remain bankable with the lenders you work with. So that way, the next deal you find that's a rock star of a deal you want to buy, you're bankable. So that way you can actually buy it and a lender will lend money to you so you can help make that acquisition. And so that's why it's very important. I always love LLCs as step number one, for you to put your rental property in the LLC. And then if you have substantial equity, to have several LLCs in order for each one of your properties to maximize your books of records. So that way, when the underwriters for banks look at your books of records, it makes it very easy for the underwriter to understand where your cash flow is coming from. So that way they continue to lend you money to acquire more and more property for your portfolio.
Perfect. So you're coming to Fort Lauderdale. You're going to be speaking at our boot camp, October 16th and 17th. What can people expect to learn from you? Obviously you're an expert. You talk our talk. You're in our language, our world of real estate. You are a Floridian. You're living there. What can people expect to hear and learn from you firsthand?
What you're going to learn is the do's and don'ts from a tax perspective. What can you do as a landlord to maximize your tax savings so you could pay this much tax legally and ethically? That's what I'm going to teach all of you all day long on how we can get that mission accomplished. And then number two, learning lesson is what steps you need to do to plan, not necessarily also to save this much in tax, but also to set yourself up for your family to have a large net worth. So that way you could retire early and do what you want to do in life.
It's not what you make, it's what you keep, folks. That's what I've learned. And again, I learned it firsthand when I sold a business, me and my business partner. And I learned very quickly that if you do not act correctly, they will come and knocking on your door for your money. And just because you sold a business for a lot of money or you sold a house does not mean you get to keep it all if you don't do it correctly. Luckily, I had the right team around me to give me the advice. And I think that's what Stephen's going to be able to share with all of us. So again, if you have not gotten your tickets, we are doing an early bird special. Go to investorsummitbootcamp.com. Again, investorsummitbootcamp.com. It's going to be, I think we got like 12 top level speakers. Again, we got Bobby Sharma, Ashley Kerr from Bigger Pockets, Stephen Hall, Stephanie Saunders. I mean, the list goes on and on of people. It's going to be really, really good. Very educational, learning not only about Florida, but in general. You're going to walk out of there with a lot better perspective and education. So, Stephen, thank you so much for being on today. I really appreciate it. Definitely looking forward to meeting you and talking to you in person in Florida. Any parting words for anybody?
The parting words are definitely plan your trip today to be there. There's a lot of great people there that will help you. And what I've learned over the years, the more you invest in yourself and education, the more money you save and the less risk you take over time.
Yeah. Key word is invest in yourself. I'm a big believer in that 100%. It's made me 7-figure real estate portfolio many times over because of that key word. So again, Stephen, thank you so much, everybody. We'll see you guys next time, or we will see you in Florida.